Welcome to our latest webinar for corporates. In this series, we'll be examining recent events and looking ahead at what might be in store for financial markets and the economy. Welcome, everybody. There is a change in the format today due to unforeseen circumstances. I'm afraid you only have me presenting on this call. We're looking forward to getting Piers back on the call next month, but it may well be a lot shorter than you're used to. But at least that means we're going to hand you some time back in your day. So without further ado, I'm going to go straight ahead into the contents. So you'll see that trying to focus on the inflation data that we've seen, and then we'll be moving ahead throughout the presentation onto some other things that I think are quite interesting trends or quite interesting emerging themes as far as the global economy as we hurtle towards the end of this year and into 2024. Following up with our look at FX market forecasts, all of which are under review. The next slide, and look at what we've seen in terms of inflation trends. Well, it's all very encouraging as far as inflation is concerned. The trend in inflation appears to be well entrenched now, moving lower, moving back towards target, in some cases hurtling towards there at a rapid pace, and we'd expect to see further improvements as we head into the end of the year, albeit those headline inflation numbers might get influenced a little bit by the rebound in energy prices, particularly in oil prices that we've seen over the course of the last couple of months. But the thing to focus on rather than the CPI chart on the left-hand side is the PPI chart on the right-hand side, where we are definitely seeing a very sharp decline in producer prices in Europe. And we're also seeing falls in the UK and US producer price inflation does appear to be now consistent with meeting the target for inflation, for consumer price inflation over the medium term. But I would highlight that in some areas, so in the likes of the Netherlands, we've seen consumer price inflation fall back into negative territory, so deflation for the first time in over 8 years. And I do believe that there are some growing threats of deflation because of the problems that we're seeing in China's economy. So they might embark upon additional price cuts to try and grow their overall share of exports in what appears to be quite a challenging global economic environment. So these inflation numbers, well, we could be seeing the beginning of an undershoot in inflation as we head towards the end of the first or even the second quarters of 2024. And that may present greater challenges for central banks moving forward. So if we move on to the next slide, well, we saw the Bank of England hold off from a rate hike for the first time in 14 meetings. So they chose to leave interest rates on hold, but it was a very, very close vote. And more importantly, I think there are additional pressures with regard to the November meeting. So we'll have had the September inflation data by then. That could mean that we get another very, very tight vote. And it appears to me, at least, that the Bank of England are being pushed around by the economic data, particularly the inflation numbers. So in the next sort of couple of weeks or so, we're going to get the next round of UK inflation data. And that will be absolutely critical in determining what the Bank of England decide to do at their November meeting. And realistically, we could have 3 decisions on the cards. We could have no change. That is, if we continue to see the improving trends in consumer price inflation data, if we see an arresting of that improvement or even a partial move back, so retracement in those inflation numbers, you could see the Bank of England raising 25 basis points. And if there's a complete reversal, particularly in core inflation in those September numbers, you could even see the threat of a 50 basis point hike. I think markets will price pretty quickly for that once we get that inflation data released. We saw the European Central Bank still hike in their last meeting, but we are now looking at the potential for no change at their next one. And I do think that although some of the European Central Bank board members are talking tough about the prospect of additional rate increases from here, I think given the trends in the economic data that we've seen, the risks are to the downside in terms of where markets are priced. So markets have some risk of a further rate increase, and there is the possibility that there will be no further rate increase and possibly even an earlier beginning to the rate cutting schedule in 2024 than the market's currently priced for. And as for the US Federal Reserve, well, I thought it was actually interesting that overnight we saw the Federal Reserve Chair, Jerome Powell, confronted by business owners in Pennsylvania, and the list of problems that they presented the central bank governor with, the central bank chair with, were almost entirely supply side related. So again, how are the Federal Reserve likely to meet those supply side challenges? Well, I'm not sure that they have the weapons, either conventional or unconventional, in order to address those issues. But some of the problems will be exacerbated, particularly in areas like commercial rents, if interest rates continue to climb. So if we move on to the next slide, I just wanted to highlight this because we've seen a bit of a roller coaster in consumer confidence indicators and in a number of other indicators, the likes of business confidence, for example. But are there signs that these may be beginning to turn? I certainly believe in the purchasing managers indices that we're seeing a turn, and we've seen UK consumer confidence recover much more than we were expecting, given the ongoing pressure on household balance sheets from higher interest rates. I think the UK therefore might be uniquely exposed to the potential for consumer confidence to turn down again, as households, particularly middle-income households, find themselves under greater pressure into 2024 in terms of mortgage refinance. And the other element to note here is that you're starting to see a downturn in German consumer confidence, a potential upturn in other elements of consumer confidence across the Euroland economy. But given that Germany occupies around a third of overall Euroland GDP, what happens there could be absolutely critical in terms of what happens across Euroland. Finally, as far as US consumer confidence is concerned, that turned up over the course of the sort of summer months, but appears to be turning down as we head towards autumn and into winter. And what will worsening credit quality mean for consumer lending and therefore for consumer confidence? Could we see pressure on the US, because it's particularly the US where we're seeing that worsening credit quality at the moment? What will that mean for the global economy? If we look at the next slide, got two big political events coming up. I'm going to deal with the one on the right first, which is the UK election that we're expecting to occur sometime in the second half of 2024. Now we're in the throes of the Conservative Party conference at the moment, and you have the Chancellor talking about that it's too early to be committing towards tax cuts ahead of any election. I think that will disappoint many party members as far as the Conservatives are concerned. But we have also seen some closing in the polls recently with regard to the UK's political decision-making as far as who the electorate think they would want to vote for. They're becoming a little less convinced by the alternatives provided to them. So there's still a risk here that we could have this major political event ending in no result. So nobody getting over the line with regard to a majority, and some sort of coalition having to be formed, or perhaps a minority government trying to take the reins. I think that if it were the latter and it was a minority government, I don't think that would last very long. We could be talking about another election within sort of a 12 to 18 month period. And I'm not even sure that the US presidential elections are going to be particularly decisive either. I mean, at the moment, we're hearing a lot about it being another runoff between Joe Biden and Donald Trump, but neither of those candidates are necessarily the Republican or Democrats' first choice. I think it's the case that they have captured enough of a minority of the party that it's going to be very difficult to unseat them from their front running roles. But again, where are the positive visions that we're seeing from either the US or the UK with regard to the key issues for the future? So things like climate change and labor supply, business investment and infrastructure. Who are the political parties that are able to capture the narrative in a positive fashion that will capture the hearts and minds of the electorate? So that could mean that we get a lot more volatility around polling numbers, and therefore that could have a negative impact on financial markets as we head into 2024. If we look at the final slide, and I mentioned that the forecasts are under review. We've obviously seen a very, very big move in sterling dollar and euro dollar in recent weeks and months. So these forecasts will be updated over the course of the next month to 6 weeks. But I think I would re-highlight the fact that there are more balanced risks now around sterling dollar in the sort of 120s, more balanced risks in euro dollar in the 104 region than there was when we were sort of 8 to 10 weeks ago in the 130s for sterling dollar and in the 110s for euro dollar. So I think we need to be mindful of the fact that we've moved quite a long way in percentage terms without really anything standing in the way of dollar strength. Maybe we might be seeing some signs of an inability for the dollar to continue to strengthen from here on in. So let's just watch out for that. I think that there could be some interesting times ahead and some greater volatility as we're in now the fourth quarter. So as we head towards the end of the year, I expect there to be greater volatility in currency markets. And that could be generated by Asia. So we could be seeing Asian markets like dollar yen, dollar China, for example, creating greater volatility. I think there's a greater risk of intervention by central banks like the People's Bank of China or the Bank of Japan. So just watch out for those sorts of things. Let's not focus on the numbers for now. Let's focus on the risks, and I think they're more evenly balanced than they were some 8 to 10 weeks ago. Thanks very much for listening to the webinar. We hope you found it informative. The next in the series will be available shortly.